Green Climate Fund, Global Environment Facility, Climate Investment Fund, and also any potential institution. So as a closing statement, Indonesia Environment Fund try to be connector, try to be interlinked, yeah, from the financial resource, from many funding resource from the international side, and then try to connect with the domestic side to spread our benefit to all the type of beneficiary, including from the local government, from the provincial level, community-based level, private company, social enterprise, community, local NGO, and also any particular beneficiary. So this is from us, from the Indonesia Environment Fund. Thank you.
Please give Mr. Joko applause. Well, thank you, Mr. Joko. Now, our last speaker, Miss Anje Bieber, are you with us? Hello, Miss Anje Bieber, are you with us?
Hello.
Hello. Okay, I now hand it over to you, Miss Anje. Thank you.
Thank you very much. Maybe also from my side, a very heartily welcome and also a big applause to this event. I think it's a great initiative of the Indonesian students and the honorable speakers before me were also stressing about not only a low carbon environment or low carbon objective, but also the overall necessity to look at the bigger picture, which means to also look at biodiversity. So I am now going to tell you a little bit about the perspective of the private investor side. So who am I? I'm heading up the sustainability SDG office of a large advisory firm. We are very well known in Germany. We are also, we do consulting, we do research, a lot of research. And thirdly, we are also investment manager for institutional investors, but also private investors. And we manage around 60 billion euro. So my job is actually to work with most of our large investors, which are pension funds, insurance companies, and banks, on their strategic transformation towards a more sustainable economy and sustainable investing. So I'm in the middle of this transition, and I'm sure that lots of you as students are super interested in going into this field. And as we all know, the most important thing is money to finance all of this transition. So could you show the next page, please? What is important for investors, private market investors, to change their mind or do think different about investing rather in a more sustainable way is maybe not only usually some sort of moral ideas, it is hard facts, is money, and it's usually risk. So the most important thing when you talk to institutional investors is risk, long-term risk, because they are responsible of providing pensions for decades. So they are responsible for investing the pension money so wisely that it really lasts for the next 20, 30, 40 years. And what is the most crucial things that they're really afraid of is risk. What is therefore very important to look at what are the economic risks all over. And this is the slide taken out of the World Economic Forum risk report, which is published every January. And as you can see, the first four biggest economic risks, so not only human risks, but economic risks are actually in the color of green. So that means they are environmental risk. That means directly institutional investors, private investors have to incorporate environmental issues, environmental risks into their long-term strategic planning. That is also, and I will go to that a little bit later, that it also manifested in the regulatory changes. So the most important thing of institutional investors are the 3R, which I usually state. So it's return. So they are obliged to make return. They cannot do any philanthropic investments because they simply have to pay out pensions. The second R is risk, which I'm referring now. And the third R is risk, return, and got it. I will tell you later. Anyway, so it's regulatory changes. So it's risk, return, and regulatory changes. That's what they are driven by. And so what I'm showing you now is what is the background of the maybe different decision making of institutional investors. And I can tell you, I've been working in the institutional world for more than 25 years. And I can tell you that there is a great change and there is a great trend. It's still slow. It's still, especially in Germany, not that fast. There are other European countries, especially, who are very, very interested and very marching forward in terms of a very clear transition towards a more sustainable economy. Next page, please. What I'm really happy about is that Mr. Tony Vaggi already confirmed that we have to look at nature, not only at low carbon environment. That is sometimes a little bit too theoretic and too long term. And yes, we need a lot of money for that. But what does it mean? And if we look at the bigger picture, which is nature, which is biodiversity, we therefore see much more viable and much more tangible how the economy actually depends on nature. So we have the clear economic dependencies. So economic, as you can see, 50% of the world's GDP is depending on nature, and especially Indonesia, which I know very well. By the way, I'm a very big Indonesian fan, and I've been going to Indonesia many, many, many times for diving, by the way. The economy is highly depending on the services of the ecosystem. So it's soil, it's water, it's filtration, it's disease control. Of course, it's also climate regulation, but there is much, much more that nature and biodiversity is delivering and servicing to human economy. At the same time, we as humans have the largest and most crucial negative impact to this ecosystem, to the nature, and that is the changes in land use, the climate change, which we cause, the pollution, which was already mentioned by Mr. Vaggi, the overexploitation of organisms, especially in the oceans, and also invasive species. So we are the cause of the biggest mass extinction, which you have probably heard a lot, but we are the cause. So we have to change something. And the hopeful and the good news is that step by step, even not only the public side, which we heard from Mr. Yoko Tree and also Mr. Saputra from the World Bank, the public side is noticing and doing a lot of things, but also the private side is much more interested in this. Why? Because we are simply depending on nature. And if we don't do something now, we will have a big human and nature and also economic problem in not a long time. Next page, please. So why is biodiversity next to climate change now the next big thing? So if you look at the investment strategy of large, let's say, European institutional investors like pension funds, and we're talking about a market range of about, let's say, 4 to 5 trillion euros. So pension funds are one of the biggest and most important in private investors that there is, next to insurance companies. And the good thing is they have a very long-term investment horizon, so they care about long-term issues. So why is biodiversity now one of the big things? Because climate change, as we've heard already from the UN climate decision of Paris of 2015 already, to be able to reduce our carbon footprint by 2030, has been starting a big trend and transition in the investment side, which caused a lot of investments in renewable energy projects here in Europe. And they are still seeking money to deploy in renewable energy projects. So this could be also a hope for the global south. But on the other side now, in their view, biodiversity is getting much more crucial, because we see such a rapid loss right now. So biodiversity is essential. We have huge economic dependencies. Therefore, we need action now and not only in 25 years. What is crucial about investing in biodiversity is actually measurement. So it's even more difficult to measure than maybe carbon, because there you can simply measure CO2 emissions. However, it is at the end of the day also a big investment opportunity, and I have a very big mission. We have arranged.
I'm sorry, Miss Anja, just as a reminder that there are only 5 minutes remaining for the normal presentation time. Thank you.
Yeah. Next page, please. As I said, it's risk, return, and regulation. A regulatory environment is drastically changing. I guess you are also studying that if you're in studying in Germany. You have been hearing about all the regulatory changes. Next page, please. What is interesting is that it all comes together. So on the left side, you see the 6 climate environmental targets of the EU taxonomy. So that is the most important regulatory change, which will drive the economy and also the financial economy in Europe, because it gives a clear target and a clear definition of what is a sustainable economic activity. And the first 2 have been defined. So climate change and migration and adaptation is defined and well integrated into the economy, mostly looking for renewable energy projects. But the last 4, so water, recycling, pollution prevention, and healthy ecosystems, is yet to be defined, and is yet to a lot of investors are currently seeking investment opportunities. There also to mention, and that Mr. Vage also mentioned, the SDGs is also important, because SDGs are mainly a standard driver, a standard framework that a lot of investors already use. Therefore, there will be a lot of attention, and there will be a lot of activity, especially on the 3 high-risk sectors. Those are the most dependent and the most negative impact sectors. And this is agriculture, forestry, fishery, energy, and mining. And as you know, Indonesia is one of the core countries, especially with agriculture, fishery, and mining in these industries. And so there's a big opportunity for transformation. Next page, please. That is what investors are looking for is mostly private markets investments, because private markets means it's not publicly quoted. Private markets can be private equity investments, private equity growth, infrastructure, real estate investments, land and timber investments. And what is also very important for investors is blended finance possibilities. What is very crucial in finding private investors is also the governance. So the governance of the investment opportunity is very crucial. Things like money laundering, fraud, the stability of political systems, the stability of political engagement is very, very crucial, because all of these investment opportunities and asset classes, as you know, are extremely long-term. Next page, please. Just a last word on our company. We, as I said, are very well known in Germany. A lot of institutional investors seek advice on what we do, and that is very crucial. As I said, we combine the long-term targets of the SDGs as an investment opportunity with ESG criteria, which are for us rather risk management tools. And one of the key issues is that in order to find private capital, you need to consider all the risk and also governance issues that investors have to fulfill. That's their restriction. They cannot overcome that. And on the other side, there's a lot of hope, because large-scale investors are seeking investment opportunities in high impact, positive impact, biodiversity and climate projects. Thank you very much for your attention.
Please give applause. Thank you so much, Ms. Anje, for the insightful presentation. Now we will have a 25 minutes panel discussion. And for the audience, also can scan the Slido later on. And Dr. Joko, Mr. Joko, are you still there?
Yeah.
Mr. Tony, are you still there?
Yes.
Okay.
Here.
Okay, thank you. So we will start our discussion. So there's a lot of information that we got today regarding the green financing, how and what the type, also innovation in the green financing. So we have question for Mr. Tony. Maybe could you please explain more about the mechanism of the green bond? Because just now we see in your presentation that you mentioned about these bonds.
Yeah. Okay. So green bond mechanism, right?
Yes.
So within the green bond mechanism, actually similar to other bond, but this is very much a thematic bond that has been designed to support the green development of Indonesia. So the mechanism, you have to have an issuer. So in this case, you have either the government, the Ministry of Finance, or even the private bank, or the non-sovereign bond, and also other institutions. You have the chicken and the issues. But then once the bond was issued, then you will have to make sure that the fund that's been raised will be used to fund the intended project that is, in this case, the thematic for the under the green development. And this is actually going to be the challenge because once the bond is issued, you get the collect of the fund, then sometimes the intended project was sort of like a push not on the priority. So this is what's going on with people called the greenwashing, and we want to avoid that as much as possible. And therefore, what we have to make sure is to have this bond intended for the project. Similar with the blue bond and also the coral bond, we have to make sure that we have the mechanism in place. We know that we have some experience with that. The government of Indonesia. But the key things that I would like to underline is to use the fund and was intended for.
Okay, thank you. Still related to this question, maybe I can ask Ms. Ance. So, based on your expertise, I would like to know, is there any similarity with the green bond or green sukuk that just now Mr. Tony explained it, that happened in Germany, for example, or in Europe?
Oh, absolutely. Green bonds are actually one of the biggest and most interesting, mostly growing asset classes in Europe. So our development bank, the KfW, has launched more than 70 billion euro in green bonds already. So they have been the first ones. And now the market has been growing, and green bonds are an extremely interesting tool for institutional investors because they deliver interest rate coupons that pension funds, for example, are very much looking for. So they are a great replacement of classical traditional bonds to green their own portfolio. So green bonds are, for us as a company and for myself, one of the most promising asset classes all over.
Okay, thank you, Ms. Anja. Okay, maybe now we will move to the second question for Mr. Joko. Just now we saw in your presentation about a lot of investment, public-private partnership in the green financing, also the innovation green financing. So we would like to know what are the key challenges in establishing public-private partnership in green financing for the low-carbon development, and how does the government plan to overcome them? Thank you.
Yeah, this is also related with the previous question, yeah, related with the green bond, because actually in 2018, I was the person in charge from the government when the government produced what we call the first sovereign green suko in the world. In 2018, a bit different with the conventional form. When the government produced and issued the first green suko in the world, before we issued green suko itself, we developed what we call green bond green suko framework. And then we review by the international organization. At that moment, we review by CICERO. CICERO is the best reviewer for green bond, green suko from the sovereign level. CICERO based in Oslo in Norway. And then from the review from the CICERO gave us 3 different layers, 3 different shading, dark green, medium green, and light green. And then we selected 9 eligible sectors to be financed by coupon or payment from green suko. And then since 2018, Indonesia continue annually until last year. In 2021, we combined with issuing SDG bond and as well as the Blue Samurai bond. And regarding on your question with the key challenge just to implement public-private partnership, I think this is very crucial, particularly when we invite the participation from the private company, because including from the banking sector, yeah, because like our experience managing the investment area under the Indonesia Environment Fund, because we distributing our money directly to below the small medium enterprise. In Indonesia, we call it UMI, ultra micro financing. This is quite hard. Yeah, this is quite challenging because they are non-bankable entity. They are not familiar. They are not popular if in front of the banking, but they are really needed financial support. Yeah, they are really need financial support. That's why we go to this area. When we ask the participation from the private, of course, a private always counting the profitability. That's why we also blend it with many a potential facility from the donors. We invite a grant mechanism from the philanthropy. We invite any particular de-risking facility or guarantee fund, and then we blend it with our money and provide to ultra micro financing. And after we can increase their capacity, they can go to the banking sector. So this is just the challenge and also obstacle, yeah, regarding to invite public-private partnership in the environment area.
Okay, thank you for the answer. Okay, still regarding to this financing, we would like to ask Ms. Anche regarding just now about the financial things. So how can international investor be interested to invest, participate in the low carbon development in developing country, global south like in Indonesia?
As I stated, one of the key issues is risk. And for classical European investors, to invest in the global south is, unfortunately, it's not my opinion, but it's unfortunately seen with higher risk. So there is political risk, there is regulatory risk, there is interest rate, inflation risk. So all of the risks have to be considered when they do investment decisions. So that's why, for example, the opportunity of green bonds, which are issued by development banks or the World Bank, are such a big opportunity, because they deliver this security, they deliver this governance through the institution, which is issuing it, but they still invest in the global south. So I think it's the securitization and the instrument which is crucial, and therefore the institutions in the global south can play a very, very crucial role. So as I said, it's the bond emissions, but also the blended finance opportunities, because blended finance are usually taking, for example, first loss tranches, so that the investors are able to get a less risky investment opportunity. I think